We're glad to have you back. Now, the effectiveness of the Central Bank of Nigeria's strategic measures in stabilizing its foreign exchange position amidst mounting external and internal challenges and a fresh Eurobond auction has begun to have an impact on the nation's foreign reserves. Nigeria's foreign exchange reserves have recorded an increase of $591.7 million in the month following government's $2.2 billion Eurobond auction on December 2nd, 2024. The reserves rose from $40.2 billion on December 2nd to $40.8 billion on January 3rd, 2025, reflecting a month-on-month growth of 1.47%. The proceeds from the Eurobond auctions likely served as a vital financial cushion, helping to bolster the nation's external reserves during a critical period. The data from the Central Bank of Nigeria highlights a steady and consistent rise in the reserves over 1 month. Let's talk to Mr. James Adisa. He's an industry sector analyst with Chapel Hill, Denham. Mr. James, Happy New Year to you, and it's good to see you.
Happy New Year. Thank you for having me.
All right, then, let's get to look at these reserves first and foremost. Looking pretty good with these improvements we are having, particularly what it means for our currency.
Yeah, so we've seen a concerted effort between both the monetary and fiscal authorities to, strengthen the naira. And as you mentioned, the fiscal authorities conducted an Eurobond auction to raise about 2.2 billion, and that has also, in a significant way, improved the FX reserves of the country, and it just means that the central bank now has much more leeway to be able to meet our import needs as well as settle our external obligations, and these are positive for the country. And it also means that the central bank is able to intervene in the market as needed. We've seen much more transparency with the adoption of the EFEM's structure in the FX market, and with the fact that we're seeing external reserves improve, this is sort of like a tailwind for the strengthening of the naira. So it's all positive. We've seen that over the year there have been an improvement. There have been sources of FX into the country coming from both Eurobond issuance, also the domestic dollar bond for about 900 million. All these things have contributed to the improvements that we've seen in the reserves, and it's currently close to $41 billion. And it's an improvement which we like. We also look forward to the central bank now publishing net reserves figures, because that will tell us the unencumbered segment of the FX reserves that we have. And it also speaks to how much the central bank can intervene in the markets.
But sustaining some of these moves, even, having the BDC guys back into business and all of that, talking about the currency itself now is something that many have talked about. In your thoughts, I like to always ask this question. Do you think our currency is appropriately priced at the moment?
I think, when we look at our own view is that, right now, the naira is definitely undervalued, and we think that it will be a re-rating. But the long-term expectation is that it's a trend towards a much more closer towards like 1,200 based on fundamental principles. Now the question is, will it trade at that level? Those things will be, or the fact that the naira will trade at that level will be determined primarily by supply and demand in the FX market. It's a free market now. And so if the central bank now intervenes much more and in larger quantums, we would then see an appreciation in the currency. But, the fact that only the central bank is the largest seller in the market isn't, the best. We've seen an improvement in some of the fundamental sources of FX into the country, but we think a lot more needs to be done. We need to see the oil companies also participate in that market, possibly also sell, because they earn their revenues in dollars. But just speaking on the fundamentals of it, we've seen 8 consecutive quarters of trade surplus, we've also seen that crude oil production has improved. On average, it has increased by about 8%. And although we've seen about a 2% decline in the benchmark Brent crude oil price, so about $80 per barrel in 2024, the improvement that we've seen in production has offset that impact of the decline in prices. So it also speaks to the fact that on a fundamental basis, flows from crude oil sales or receipts from crude oil sales to the central bank have improved. And that means that they also have, much more firepower to defend the currency. So while it is undervalued, what will determine whether to trade close to its fair value is the supply of FX liquidity or the improvement of FX liquidity in the market.
Now, let's look at the equities market in recent times and what has played out. What would you say, your overview, coming from what we've seen in 2024?
So the market performed exceptionally well in 2024, and from a local perspective, we think that there's still room for improvement in the Nigerian equities market. And I think we have three broad themes that would drive performance that we'd see in the equities market. The first being corporate actions. We expect to see certain corporate actions drive value for equity shareholders in the Nigerian equities market. We also expect to see dividends play a critical role in the improvement or the growth we would expect to see in the equities market. And finally, fundamentally sound stock. So the stock that, based on their core and normal operations, are able to derive value for equity shareholders. Those are the three themes that we think will drive value for shareholders in the equities market. But from a global perspective, I think that it's a mixed bag. Because on the one hand, we see that in the US market, for instance, the President Donald Trump, his inaugurations on the 20th, has some policies around tariffs and trade as well as immigration. And some of these things have significant impacts on corporate earnings. So, for instance, cutting corporate taxes would mean much more, profit after tax for equity shareholders, and that's positive. And so, for investors betting on that, there's still, some value to be seen in the global equities market. There's also the fact that there's the AI-driven, tech bubble, and also the adoption of AI and its build out into other sectors. I think this is one of the recurring themes that we've seen across major outlooks for the global equities market. And I think that these are some of the things that will determine how well the US equities market will perform. We've also seen other major developed economies adopting accommodative stance. And, this also means in turn that, yields will be lower and the equities market will definitely enjoy from that. And so those are some of the views we have concerning both the global and the local equities markets.
Looking at Trump's presidency, coming in very shortly, that's the president-elect, many are saying that this could also affect trading in the global space. What are you seeing, considering expectations of some tariff hikes and all of that? Do you think that would also affect trading globally?
Yeah, we think that the increase in tariffs will have an impact on global trade. The US is looking to increase, domestic production, but a balancing act is required because, in increasing tariffs, you do not want to make it very expensive, or you do not want it to have significant inflationary pressure on the country. And so, even though we expect him to, be aggressive somewhat with the tariff hikes, we do not expect that they will do so at the detriment of the growth of the economy.
So basically, what would be your, even for investors that we expect to come in, what do you think would be, what are the expectations, what are those things that we need to look at for in 2025? What should investors be looking out for the equities market and, of course, the larger economy?
I think in the domestic markets, one key thing that we should look out for is stability in the currency. This has been one of the roadblocks that has kept foreign portfolio investors out of the equities market. And if we see a situation where the Naira trades comfortably within the 1,500, 1,600 region, we expect to see foreign portfolio inflows into the Nigerian equities market. Over time, we've continued to, reiterate that the Nigerian equities market is quite cheap, and we expect a re-rating. And we think that stability in the currency would definitely be one of those things that would drive the re-rating, because foreign portfolio inflows would naturally, drive the Nigerian equities markets towards more fair value. In the global space, I think that the AI theme is very significant, but there's also the fact that the U.S. economy is, or the U.S. equities market rather, is overvalued, currently trading at a forward P of about 21.75 times. The last time Trump was in power, the equities market was around 18 times, 17 times forward PE. And so a pullback might be seen in the equities market. So I think investors need to be very careful, and they need to be, selective in where they invest their money. Those are some of the things I think we should look out. Riding the AI theme on the global scale, and in the local markets, I think that stability in the currency is one thing we should pay close attention to.
James Ola, Adisa, industry sector analyst, Chapel Hill, Denham. Thank you so much for your time on the program.
Thank you for having me, Mr. Tulu.
All right, then we will take a